Hey everyone, this is Rob Keynes with Gold Silver Pros, and I'm here today with Chris Marcus of Arcadia Economics. Chris, how are you doing?
I'm doing pretty good, Rob. Appreciate you having me on here and good to catch up and talk with you today.
Yeah, good to join you. I've been watching your stuff for quite a while, and especially your coverage of the silver market, and appreciate all the interviews you've done and all the work you've done with all the experts in that arena. Want to have you on the show to just discuss silver because I think it's an investment that offers a really outstanding opportunity for people, especially people that don't have a lot of money saved. I think it's in a really good place right now for people to purchase at its low, but I think that there are also some concerns that we have with the silver market. I know that you have been exploring recently with some of your work. So if you wanted to go ahead and start us off with that.
Yeah, well, silver, geez, is certainly a fascinating market. Sometimes I wonder if I could go back and take the red pill or the blue pill, the one that makes you forget it, because it is captivating in its own way. As you mentioned before we started talking, that really the investment profile is rather stunning. And from a sheer valuation and looking at what it's worth and where it makes sense, I was so stunned by what's happening in silver that's primarily why I walked away from a trading job on Wall Street, because I did see the potential. I still do see the potential. Obviously, as we've learned, especially in the past decade, there are a lot of other factors that go on in all of these markets, which I would say, depending on which one you're looking at, can border from gray area to outright manipulated. I mean, I know that's a word that freaks people out a little bit, yet we've seen banks get fined for LIBOR manipulation, mortgage market, power, energy. Basically, you have the Federal Reserve openly manipulating the bond market. They just call it policy and hope that nobody notices. So certainly, I was rather intrigued by what I saw in the silver market, where the estimates I hear about for every ounce of silver, you have upwards of 500 paper claims on it, which creates a very interesting dynamic, which certainly we can dig into today.
Okay, great. Just wanted to add to your point about manipulation. I know a lot of people equate manipulation with conspiracy theory and tend to put people in a bucket when they hear that word. But through my research, I've found that the commodities markets have had a history of manipulation dating back 150 years. Something I published recently was a 500-page piece published by the Yale Journal on Regulation on the history of manipulation of all commodities markets in the U.S. And the author wrote about 500 pages on this, and he documented how all of the laws that we now have in place have all been put in place to deal with past cases of manipulation. It wasn't that they were trying to create a law for something they thought could happen. It was a law to regulate activity that they didn't want to see happen that had already happened. And one of the interesting pieces in that Yale Journal Regulation piece was, and I didn't know this, but Teddy Roosevelt, way back in the early 1900s, was really on the side of the farmers. He was an advocate for the farmers and basically people who lived out in rural America. And he felt so strongly about the manipulation that was going on in the commodities markets. He felt like the price distortions really hurt the farmers. That his administration passed 30 separate pieces of legislation related just to commodities markets manipulation and manipulative practices. So for those people who hear the word manipulation and think, okay, this is not a legitimate concept, just realize that there's been an entire field of study on this in some of our best universities over the commodities markets and exactly how those practices have happened. And to end that piece, and this is the last point I'll make on this, the author basically states that it's so hard to get convictions in that space now because the burden of proof is to prove the intent of a specific trade to manipulate the market versus what the actual effect is. And if you're just trading something, a futures position in a market, it's really hard to determine intent of that trade. And that's why they don't get a lot of convictions. So there's been a call to really change that law. But I think there's still an acknowledgement in the industry that there are some manipulative practices. So I just wanted to throw that in to reinforce the concept that commodities markets always manipulated. And it's just something that's been there throughout history. And it's something that, we've always had to deal with. So.
Yeah, and if I can touch on that for a second, Rob, in the interview, I'm actually doing a book about the silver market, why the price has been so bizarre, where I went out and interviewed a lot of the top experts. One of the folks I brought on that I know you saw was Bart Chilton. And it was
Yes.
interesting. He talked for 45 minutes, giving piece after piece of evidence of exactly what went on, which a lot of us have alleged for years. Yet here was the former CFTC commissioner who oversaw the investigation into silver, confirmed that Bear Stearns had the large short position, confirmed that it was passed over to JP Morgan, and that the combined position was so large they were given a temporary period to reduce it. Bart says they came back a couple months later, it had become even larger. This is the exact time when silver dropped from $21 to $9 following the Bear Stearns takeover, while there was actually a shortage. There's one dealer that I have a partnership with that they were worried they were going to go out of business because you simply couldn't find any metal, which, again, here we have, the price dropping by over 50%, which would seemingly imply that supply has overwhelmed demand. So again, I get it that people find it hard to imagine that some of these things are going on. I get that. I was working on a trading floor, and I've been shocked at the things I see. And perhaps the last point to touch on there, the other thing that Bart mentioned in his interview was that there was a certain standard for what was required to get a manipulation conviction. And he was told by their forensic economist that while he felt they had a lot of damning evidence, they didn't meet that standard. But it bothered him so much that the standard was eventually changed. Had this taken place under the new, more stringent standard, that he felt there would have been a conviction. Of course, since then, we've had Deutsche Bank get caught. So some of the things these guys are talking about on the chat, I mean, is beyond mind-boggling. Of course, Bank of Nova Scotia, HSBC, JP Morgan last year, where now there's an ongoing case. So again, I'm not saying that in the sense to get people overly concerned, but if you're in a market where things aren't acting in a free market fashion, doesn't necessarily mean you can't trade it or that there is an opportunity. But part of why I left Wall Street was that I saw things in the same way people were rightly pissed off that everyone's saying, no, the economy's fine. Ben Bernanke was saying subprime was contained, and they got clobbered. So I saw a very similar situation playing out, which is one of the reasons why I continue to research and share what I find on that.
Can you talk a little bit more about the futures market and discuss, I know that you and I have both written pieces recently on a supposed whale that's come into the silver market, and that's somebody who may have previously been short who's now taken a long position. And what the evidence is around that, what we know, and really what we don't know about that.
Sure. To start with, for anyone who maybe hasn't heard about that yet, Alistair McLeod of Gold Money wrote an article about a month or so ago suggesting that based on the way he's reading the COT report, that it appears as if a large buyer has emerged. Ted Butler, another voice in the silver community, has said something effectively similar. And it was interesting. They got into a little bit of a heated debate over some of the details, which, again, these COT reports, not the easiest thing to decipher. Yet what stood out to me is that here are two experts that, while maybe they're seeing some of the details differently, they're both in agreement that there is someone buying a lot of silver. To further to that, I mean, we can look at the JP Morgan house account on the COMEX report, which shows 153 million ounces. Maybe that's for them. Maybe that's for a customer, but it's for someone. And to put that in perspective, that's more physical than the Hunt brothers or Warren Buffett held. then what has really caught my eye, and one of the reasons why I'm wondering if we might be getting closer to some sort of resolution to this, is that over the past 2 months, we see that 80 million ounces of silver have at least supposedly been added to the silver ETFs like SLV, and we were giggling about it yesterday. Apparently, Deutsche Bank has a silver ETF, which, maybe not the best place to put your
Right.
I don't know, but now I know there's speculation. Does SLV actually add the metal that they say they are supposed to? And I know you can get a lot of opinions on that. Again, I don't know that it's the safest place to bank on having silver yet. In either case, if 80 million ounces have been added, I mean, to put in perspective, back in 2010, following QE2, in an interview I did with Ted, he mentions that 60 million ounces were added, which he felt was the primary driver up to $49. Now, in the last 2 months alone, we have reports of 80 million ounces supposedly being added. So in the end, whether it's China, whether it's JP Morgan, whether it's Santa Claus, someone appears to be buying a large amount of silver. And I think it's likely not completely unconnected that where we've seen the offer overwhelm the bid over the past 8 years in particular, now it's almost as if the bid is becoming bigger than the offer. And we've seen a lot of, in the last couple of weeks, it seems like there are these spots where it looks like this spike or plummet downwards that we've seen so often. Again, perhaps the best example being today. Although it used to be silver would go down $1 or $2 and sit there for a while, versus it seems like these attempts to just throw a lot of paper on the market drive the price lower, whether it's the presence of a big buyer or something else. It has been interesting seeing that pattern change, primarily because if you are really short something, especially now, I don't have the mindset of a banker, but I would have to imagine that somewhere in some of these banks that are writing all this paper, there's someone who says silver could be a little undervalued here. So if you're already short, you're only going to short more if you can drive it lower. At some point, you come to the conclusion, I can increase my short position, but the thing is going to go up higher. Perhaps that's when we see this end. We'll see how it plays out, but that's one of the things that's really caught my eye recently.
Okay. A couple of things I wanted to unpack there from your statements. A lot of people, even those who trade in the gold and silver markets, especially if they're not trading the physical and they're really looking at ETFs or they're looking at some of these paper positions, will state that it doesn't really make a difference how much paper you're throwing on the market in terms of how the market reacts. But I know that you have experience in these markets. Can you explain for the layperson who may be watching this video, how does the paper market affect the physical market?
Well, pretty significantly, because the paper market is what's setting the price. Again, we could, touch quickly on that example I gave before, where leading up to the failure of Bear Stearns, it's actually so stunning and the perfect example. Silver was at $13 in September of 2007, which is when the Fed started cutting interest rates. And just as a quick rehash, I know a lot of folks often associate Lehman Brothers as when things really started to escalate with that crisis, although I was back on the trading floor then, and I remember the summer of 2007. It was clear that there was something going on. So by September, the Fed started cutting interest rates from 5.25%, and I believe by the time of the Bear JP Morgan deal, it was already down to 3%. So to put that in perspective, that's 225 basis points. That's the same amount that it took them 10 years to raise interest rates back up to, and that's what they cut in 6 months. Of course, you also have chaos in the market as these mortgage losses are growing. So I would argue that's exactly what causes people who actually buy physical silver to buy silver. You had interest rate cuts, banking problems. So silver rallies from 13 to 21 over that 6 month period. Then the takeover deal happens. We described the conditions earlier. And right then, when it seems like the demand would be even higher, you see the price drop in half. And again, we know there was demand because there was a physical shortage. People were trying to buy, but even the largest bullion dealers didn't have metal. Yet now we have evidence that they had a massive position. Bart at one point calls it 40% of the market. And in an interview I did with Andrew McGuire, he was using a different metric, but I think he said at one point he looked up JP Morgan was controlling 99.8% of all of the silver derivatives. So however you want to slice it, whichever numbers you want to look at, here's an example where if you can throw as much paper on the market, especially if you do it late in the night, because if there's a bid for 100 contracts and you come and sell 10,000, you're going to destroy that bid and you can move the price lower. Now, another example that I found interesting, I think it was following QE3, it was either 2012 or 2013, and you had the Fed come out and announce QE3, and silver was actually trading lower by a day later. So what I think will eventually happen is that you'll see the physical market at some point retake control. I mean, if you have a situation where for each ounce of silver, there's 500 or more paper claims to it, essentially you have a market dynamic where that can go on for a long time. It's gone on for 8 years. In fact, I would say that it will likely continue to go on as long as the banks are able to throw paper at the market and drive it lower, which is why what's happening now, where we've seen some suspension to that pattern occur, happens somewhat today, although as we look here, silver was down from almost 80 cents from the high at one point. It's recovered 40 of that. So whether we're at the break point or not, certainly my radar is up the most it's been for a couple of years, but then you tack on that we have central banks around the globe cutting interest rates. Things are looking pretty dicey, and I personally think we'll see quantitative easing before the end of the year. So if the silver market is getting tight, which there are several reasons to suggest it may be, and then you throw on massive amounts of global money printing, has me encouraged that we could be nearing the end of this scheme.
And going back to the amount of money coming into the silver market, I think you mentioned 80 million ounces going into SLV. I think Yahoo Finance put that in dollar terms. It was $623 million of investment in the month of July going into SLV, where I think for the entirety of the year before that was only 45 million. So definitely a huge momentum shift in the amount of money going into the silver market. Now, again, that's going into the paper market, so I think it does. It has helped the price quite a bit. We rebounded off of like high 14s into the 17 range. But if there is indeed a shortage and that investment demand's coming in, and people like David Morgan say that once you see the investment demand come in silver, you're going to see silver finally break up to where a lot of people think it should be trading.
Yep.
What do you think is going to happen to silver price, and how long do you think that'll take? Because once people figure out there's not a large physical position available out there to get physical silver, what's going to happen to that price?
Exactly. One note to clarify, the 80 million ounces wasn't all SLV. That includes there's a couple of them. So
Okay.
the Deutsche Bank one, I think there's SIVR or something like that. So just to be clear on that, in terms of your other question, actually did an interview with David yesterday, and he had a pretty similar perspective where it's a little early to say that we're there, yet also some of the signs that would indicate that we could be there are appearing now. It's tricky because, like you've mentioned, it is a very opaque market, and I've not been able to find answers if they really did deposit 80 million ounces of silver, where they got it from. That seems like an awful lot. In terms of the timeline, I've learned, I know, well, even aside from what we've seen in metals last year, you don't want to put a date on something until you have the evidence to support that that's when something's going to play out. As much as I wish I could put an exact timeline on it, I can't, although...
Well, I think we probably crossed some milestones there, though, because we're definitely seeing less above ground stocks. We're definitely seeing more money come into silver. And I think backing that are all the problems that we're having in the world economy. And I think there's a flight to safety now going into both gold and silver, it appears to me. So I think that we're starting to see some milestones. And while we may not know specific dates, I think it definitely does look like the bull has come back to gold and silver.
Yeah, I mean, especially if whoever bought those 80 million ounces, whether I've heard some people say that that's China, and certainly it would make enough sense because, I wonder how much of this trade war is, as we're presented with in public, how much of it's theater, yet to the degree that if these guys are really playing out as antagonistically towards each other as we are presented with, I mean, certainly if China is looking for an area of vulnerability, the silver market would be at the top of my list, because you have a government that at this point, everything they do is financed solely by paper and printed money. So here's a very vulnerable area. Another thing I found interesting was on last week's Silver COT report, we saw the bank commercial short position reduced, which is very unusual because it happened at a higher price, which again, we don't know which bank that was or why they did it, but certainly that could fit the profile of what I said earlier, where if you're really short, and you continue shorting because you can drive it lower and buy it back cheaper. But if you get to the point where you can throw paper at it, but it keeps going in your face, like it has these past couple weeks for these banks, certainly if I were trading that position and I come to the conclusion I wouldn't be committing felonies to begin with, but let's say we were, and then you come to that conclusion that, if I keep shorting, it's not going to drive it any lower. Is that what one or more of the banks did in terms of buying back that short position? We don't know for sure, but certainly something to keep an eye on, especially as these prices keep going up. I'm starting to hear that the banks do get margin calls on some of these now. How significant a margin call is to a bank that has access to the printing press, who knows for sure yet. I know Ted Butler does think that Bear was getting margin calls on their silver position as it rose from 13 to 21, and that was at least a primary, if not the primary factor, he thinks, for Bear. What degree it was or not, don't know, but again, I guess getting back to your original question, there's a degree to which, as the price goes higher, if you have more margin calls, we've also seen the way the media is talking about this more now, which often maybe counterintuitive to buy high, buy low, sell high, but we know that people flock in after something's moving. So it's interesting to me that if the price doesn't get spiked down quickly, it could be that they're losing control.
Mm-hmm. And I want to talk about the miners for a moment. Some of the research I do, I know a lot of people do as well, is over mining costs. And over the last few years, I've toured some mines and had conversations with mining company CEOs and operations managers, both in the United States and in Mexico, which are both big gold and silver mining regions. And it appears as though the prices for silver were trading below that of the primary silver miners. So the primary silver miners, average is about $16.50, per ounce to get it out of the ground economically. Silver being different than gold too, because while most of gold mined is still above ground, either in jewelry form or in coin and bar form, silver is used up in industry. So it didn't make sense for the price of silver to stick below the cost of mining for so long. And I think that contributed to the shortage. And that also contributed to some of the mines pulling back some of their production. I know First Majestic had pulled back some of their production. And a lot of the exploration companies in silver that I had done interviews with were not seeing the deals come in to buy that silver because silver was too cheap. So it's almost as though just regular market dynamics would push the price of silver up, regardless even of what was going on in the futures market. So I think there's an element of that, and I think there's an element of investment demand as well. And I know that you and I were talking before the interview about the supply-demand fundamentals of physical silver. I know that we used to have big above ground supplies of silver, but all the above ground silver that I can find is basically tied up in contracts, either up in the COMEX or on the ETS, meaning those positions would have to be sold to liquidate that physical, meaning there would have to be a corresponding price movement. In your research, do you see big above ground stocks of silver that are just sitting there, waiting to fulfill market demand? Or you think that we're pretty tight in terms of if we had a run on the price of silver to the upside, there just wouldn't be a lot of it to be found?
I think you nailed it, Rob. No, I haven't found massive supplies. Again, it's interesting. At this point, any data I see, silver, gold, I realize let's not take this as, it's written on the 10 tablets here. I mean, there's a lot of guesswork that goes into the numbers, but I mean, you raised some great points there that, like you said, perhaps more than anything, forget whether someone thinks it's manipulated or not. We're talking about a commodity that's used in basically everything we do that involves electronics that was sitting maybe now slightly higher than most of these guys. But essentially, you're counting on miners to pay money to go dig it out of the ground and provide it to the world at a loss, which obviously, like you point out, mines have been getting closed down. Mines that would have been going online are being shelved. So that's what I think gets missed, is that we're talking about something that we need. See, I see gold as slightly a different story, and maybe this is why I've always focused more on silver, because yes, there's a lot of that same shorting in the gold market too, and I think the price is a lot lower than it will be. Yet, as you point out, the majority of the silver is consumed. So we hear a lot about, the ratio in the Earth's crust somewhere in the range of 10 or 15 or 17 to 1, whereas, the price ratio is at 90 to 1 or somewhere around there. So you could make the argument that it should be around what's in the Earth's crust, 15 to 1, yet then you also factor in that the majority of the silver is consumed. And I'd say even with the variability of the numbers, this has been pretty consistent, that I think most people would agree that in terms of silver that's available above ground in investment grade form, you hear anywhere from 2 to 4 billion ounces of silver, and there's about 6 trillion ounces of gold. So in terms of what's available at the market, silver at this point is actually rarer than gold. And like you said, well, are these people going to sell their silver if it goes up to $18 or $19? I'm guessing not, because we've heard for the last 8 years story one after another of, longtime gold or silver bulls says, I just can't take it anymore. I've thrown in the towel. Now, sure, there may be a few more like that out there, but I would imagine that when you think about, there's a very specific profile of the people who actually invest in silver. And it's usually folks that are saying something along the lines of what you and I are discussing today and think, there's real trouble with the dollar. They're looking at petro yuans being developed, the world walking away. They're seeing that, hey, we were told this stimulus was temporary. 10 years later, we couldn't even get rates past 2.5%. And now, it's the discussion is, when is QE going to be here? So, geez, that's a lot of factors on a very small market, which is why for those who have the patience and the ability to structure your trades in a way that allows time to be on your side, I think if you, if you need a couple extra bucks next month, I wouldn't go out and buy physical silver, because between the commission and the natural volatility, I think there's a good chance it'll be higher the next month. But that's, perhaps not the way to express that opinion, versus if you're saying, you know what, you're doing a job you love, or you have a career, you have extra income, and it's like, what do I, for 30 years, when I want to give something to my kids, or, anywhere even a 2+ year time frame. I simply have never come across anything that I've read about that's occurring presently or historically where something seems this out of line. I guess maybe a good way for folks to think of it is we're seeing The Big Short Part 2 play out, rather than seeing mortgages get absolutely destroyed. Well, we may see that again, but I think in terms of silver, you've had a short position pushing the market lower, and whenever that is resolved, I think the magnitude of it will be truly stunning.
Yeah, I agree with you. I've said recently, I think silver is probably the most undervalued asset on the planet that I can think of. But I agree with you. You have to be very patient. And if you're more of the trading mindset, which a lot of people are, especially people who trade options and stocks, that may not be the investment for you. It may frustrate you. But if you've got a longer time horizon, say you're saving for your retirement, or saving for your children's college, or you're looking to store your wealth over time, I think the precious metals do offer good value. What are your thoughts? I wanted to change here for just a moment before we end the interview to the general economy. I know you mentioned several times QE and the Fed. What's your position on what the Fed has done with their recent cut, and also the halting of their balance sheet runoff, and where do you think that they're going to go next? Or what are your thoughts on what probably will happen?
Well, ever since I started reading Austrian economics, not shockingly, my view of the Fed is much different than when I was in business school getting the Keynesian doctrine. In short, I've been writing for the past decade that good luck raising interest rates, that there would never really be any interest rate increases or QE reduction. It was interesting. For about 5 years, it was presented as if the Fed was in the midst of some incredible tightening cycle. Again, as we talked about earlier, 10 years later, they only raised it, 225 basis points. And to put that in perspective, even Greenspan, following the dot-com bubble, took rates back up to 5.25%. So, we weren't even close to that. And Bernanke in 2010 talked about his virtuous circle in his op-ed in the Washington Post about how creating lower interest rates, quantitative easing, is going to give people the appearance of wealth and get them to spend. He didn't put a paragraph in about how you would think you would expect the opposite if you're doing the opposite of that, which is certainly what happened. So I've seen for a couple of years now, the Fed's in a corner where, they can say they're going to raise rates and undo it. But, in the same way you saw the mortgage sector crumble underneath higher rates, if you can afford 4%, interest is your break even. Banker comes along, lowers it to 3%, and you take it out, and you're like, oh, this is great, I got the house. But then the rate goes to 5%, 6%, you're insolvent. So you just imagine that happening on a broader scale. And that's one of several reasons why I didn't think we would ever see any sort of normal rate. I know sometimes people say, well, what if somebody did something like what Paul Volcker did, raising interest rates to 20%, which on one hand would be great, but on the other hand, I mean, I think the whole thing would collapse anywhere. It's past the point of no return. And in the end, what's going to happen whenever, you see the thing starting to melt down, as we've seen already, the Fed comes back, lowers interest rates. Again, I would expect quantitative easing before the end of the year. I'll bet an ounce of silver on that one, if anything.
Okay, sure. I'll take the other side of that. Just a friendly bet there.
Okay, sure.
I think you're right, but hey, let's bet anyway.
Yeah, so, and again, I think it'll be before the end of the year, but in either case, it's coming. You have it happening around the globe. Mario Draghi is dusting off his bazooka, and all these. What was it? New Zealand cut 50 basis points, which I just wonder if we're getting to that point where, at some point people realize what's going on, and especially when there's QE, I wonder if there'll just be so much money coming into the sector that you just can't. You can try and short it if you want, but eventually the market takes over.
Yeah. I know, Kenneth, you mentioned the point of no return. I know Kenneth Rogoff has done a lot of research on the point of no return from a debt perspective, and I think the U.S. surpassed that a long time ago. I think it was maybe 5 or 6 years ago. We're past the point of no return where historically you have so much debt, I think is like as a percentage of GDP was one of his measures. And once you get past a certain point, basically you're going to have some sort of debt default. And that means a lot of money printing, and that means maybe debt doesn't get paid back. So I definitely agree with you on that. I think today I've been watching the spread on the 10-year, 2-year Treasury, and it dipped really low this morning and almost fully inverted. It got down to about 0.17. Okay. 0.017, and I think right now it's trading at about 0.204. So it looks like we're about to have that 10-year, 2-year Treasury yield curve inversion. Do you follow the yield curve inversions? I think that's probably the last indicator before the U.S. goes into recession for me. A lot of the other indicators I think have already sort of dinged the bell, but what's your view on that?
I've been following that, especially the past couple months. And geez, it sure sounds like the bond market is telling Powell. I almost called him Bernanke. I kind of lumped them all into one. Maybe they just give him a different mask and pretend to keep going. But yeah, I mean, it's almost as if the bond market is saying you are going to lower interest rates. And I think that is what they want. It's amazing to me. You have this whole shell game between Trump out there badgering the Fed to lower interest rates, the Fed pretending, well, we're not going to do it just because you say we're going to do it, and everyone's getting riled up over the independence, where in the end, the president and the central bank, they both want the same thing. I'm sure they're going to do all sorts of theatrics to see who gets the blame, or they somehow pull some amount of something to be credited or proud of in there. Yet you're going to get lower interest rates. I mean, how many $1 trillion of junk bonds do we now have that are negative interest rates?
15 right now, I think, was the latest count.
Which is stunning. I mean, it's incredible enough that someone would give a government or a bank, $100 and in the best case get 99 or 98 back, but to do that with negative yielding junk. And I think perhaps what you can take out from that is that I don't think people are excited about getting a negative yield, but that shows the degree to which people believe the bond market is going to continue to rally because they think the Fed is going to cut rates, which they will likely do. So I would guess the majority of that negative yielding debt is people who are trying to get a return because they see where the central banks are going And like you very astutely pointed out, it's not just in the U.S. That's around the globe now.
Yeah, it seems like people are going to bonds as a safe haven. I think for a time it could be a safe haven up until it's not, and that'll tend to be a waterfall or a jump off the cliff, if you will. And then the best safe haven is probably going to be the precious metals. So I just kind of skipped over buying the whole bond thing. I just went straight to the precious metals. But I think what you're going to see in the precious metals eventually, if you do end up having this bond collapse and have these currency problems that you're having in Turkey and Argentina and other places now that you may end up having in the US. So I think a lot of that money is going to flow into the precious metals market. And I think that's probably when you're going to see the big price gains, is when institutional money moves out of those sort of junky type of markets and move into the ultimate safe haven, which I think is gold and to some extent silver as well.
Yeah.
Last thing I wanted to ask you, it's been a great interview. Thank you, by the way, for doing it. What are your next projects that you're working on? What's your next focus, and maybe kind of preview an article that you have coming up?
Sure. Well, although before I get to that, one point on what you just said about Argentina, where their currency got blown out yesterday.
Yeah.
So obviously they have their election going on and a lot of factors involved, but certainly something to keep an eye on, where we're really seeing some of these currency wars start to heat up again, which I don't say that as something to be happy about. It's incredibly unfortunate, in my opinion. But you are seeing some of these things happening now, and I think we'll be stunned with the amount of money printing that comes going forward. Now, in answer to your other question, really been focusing a lot on the silver market, because I do believe when this finally goes, I'm not saying this because I focus on it. I focus on it because this is how I feel, but I think it'll be one of the most stunning financial events in history because of all the implications, in gold and the dollar and the governments and these currencies. So Arcadia Economics, a lot of what we do, I have a YouTube channel where I interview a lot of experts. We had David Morgan on yesterday. Also getting ready to release a book called The Big Silver Short, which really digs in specifically to silver. And what I wanted to capture is that, again, I know that you're doing this is your career, but, there's a lot of people that are able to get the concepts, but it was kind of like in that movie, The Big Short pointed out, where, you call it a CLO, a CDO, talk really quickly. And I've met many people who express that same sentiment where they're like just overwhelmed. And I've heard them say directly, I feel like I'm going to sound stupid if I ask. So I'm afraid to ask and understand. And I don't think that's an accident that aura is created. So what I really wanted to get at with this book was talk to, David Morgan, Dave Kranzler, Craig Hemke, Ted Butler, Bart Chilton, Keith Newmeyer. I asked all the questions that I've been sitting here thinking and wanted to bring it out in a way that anybody who has interest or wants to know what's going on or how this is likely going to unfold, the information comes across where we have different perspectives, some analysts, some fund managers, some bullion dealers, but really present it all in one place where someone who really wants to know what's going on, now you can have that and see that, which, regardless of whether you're actively trading it or just seeing the problems that are coming with the dollar and the things that you pointed out, Rob, and saying, all right, how do I respond to this? I hear people talking about silver, but, I see it's been volatile over its past track record. So that was really the goal of this book, to create something where not even just my opinion, but other folks that, can complement that as well. And so we're getting ready to get that out, hopefully in September, as the market is heating up. And again, Arcadia Economics, we do focus on a lot of the macro as well, but a focus on silver. So really a hub for anyone who's looking at metals, trying to get good information, hear other views that come on. Also have a partnership with a bullion dealer. So if anybody wants to buy or sell precious metals, we can help with that as well. And
Okay.
wanted to provide a safe place for people to go where they can get information and what they need regarding the precious metals market.
If people want to get in contact with you to get an early copy of that book, how do they reach out to you?
Well, you can go to arcadiaeconomics.com and there's a tab up there called The Big Silver Short. Welcome to email me directly if you have questions about any of this. It's chris@arcadiaeconomics.com, or you can call our office at 833-326-4653. Because I do feel it's important for people to understand what's going on, and one way or another we like to make something for the people who like watching videos or some like reading, that one way or another you can get help with what you need.
Okay. Thank you very much, Chris Marcus, Arcadia Economics. Thanks for joining us on Gold Silver Pros.
It's been a pleasure. Thanks so much for having me on. Look forward to doing it again soon.
Definitely will. Thank you.
This has been a Gold Silver Pros production. Please subscribe to us on YouTube and sign up for our newsletter on goldsilverpros.com.